Small account day and swing traders can experience some serious FOMO when they detect a large opportunity in the market but don't have enough capital in their accounts to make a huge amount. In this video, you'll learn a strategy that allows you to execute the trade at 25% of the cost. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005 and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our proprietary trading desk so you can grow your trading account.
Hi, I'm Seth Freuberg, and I'm the head trader of SMB Capital's options trading desk here in Manhattan. And with the explosion in the market focus on artificial intelligence and all the stocks connected with this craze, there can be some compelling opportunities for explosive gains, as we've all seen, with the market now at all-time highs, having been driven up by the so-called Magnificent Seven stocks, of which chip maker nvidia is the most magnificent of them all. But the problem is that if you're a developing trader with a pretty small account, buying even 100 shares of nvidia or Netflix or Meta or whatever can be out of reach for you. And so you feel like you're forced to sit on the sidelines and watch these great opportunities pass you by. But what if there was a way for you to get involved and potentially score as large of a win as people with much more capital than you have in your account? Well, that's exactly what we're going to be teaching you in today's video, so stick around. I think you're going to find this intriguing. Now, before we get into this important topic more deeply, if you're absolutely brand new to options trading, you don't know much about options and how they work, we've created a video for you to understand options basics. And if you click the card appearing on your screen right now, it will lay the groundwork for you to understand the option strategy that we'll be sharing with you in this video. Then when you're finished, you can come back and watch the rest of this video. The undisputed leader of the Magnificent Seven is nvidia. And so let's take a look at the price chart of nvidia before it actually took off and really kicked off this whole explosion in artificial intelligence stocks, which has pushed the entire market up to all-time highs. And as you can see, nvidia had actually sold off most of 2022, along with the rest of the market, losing more than half its value. But it began to slowly bounce in October. And by January 19th of the new year, 2023, nvidia had reached the 165 to 180 area as its price began to rise again. And so let's say that in the afternoon of January 19th, with the stock trading at about 169, you went ahead and bought just one call option, which expired in exactly a year on January 19th, 2024. And you picked the call located at the 160 strike price, 9 points below where the stock is trading that day, paying a price of $41.40. And when you do that, buying an option a year out for longer, you are buying what options traders refer to as a long-term equity anticipation security, or for short, a LEAP option. And in this case, we bought a call option LEAP, which is something you do if you are bullish on a stock, but you don't have enough money in your account to buy 100 shares of that stock. Okay, so now let's first take a look at what happened here from a cash flow standpoint. And remember, a call option represents the right to buy 100 shares of a stock at the call option's strike price, which in this case is 160. And so the cost of buying the 160 call, the LEAP option expiring in a year, that price in total was $4,140 that day, as you can see from the calculation. Whereas if you had outright bought 100 shares of nvidia that day, you would have had to shell out $16,962, more than 4 times the capital obligation just to enter the trade. Okay, so now let's move to January of the next year, 365 days later. And as you can see, nvidia had that famous blowout quarter, which they reported in May of 2023, which kind of touched off this whole AI rally. And then it was off to the races after that, closing the day the call option expired at 594.91. And so if you had sold that call option at the end of the day on January 19, 2023, the day the option was set to expire, which really you'd have to do because presumably you won't have the funds in your account to actually exercise your option and take possession of the shares. And so instead you just go ahead and sell the option, which as you can see at the end of that day was worth 434.30. And that makes sense, right? Because the stock is trading about 434 points above its strike price. And that call option gave you the right to exercise that option and buy the shares for 160, even though it's trading about 434 points above that. And so that's going to be what the option's worth. In other words, what that right is worth. And so let's now calculate the profit on the trade. The call option blew up to a final value, believe it or not, of $43,430, out of which, of course, you subtract the original cost to get a profit of $39,290, which is more than a 900% return on the original trade. And all you had to do was put up $4,140. Whereas had you bought the shares, your outcome would have been slightly more profit, $42,519, but your total cash outlay and risk was so much higher that the return on the trade, while still terrific, is 250% versus over 900% for the options trade. And that's only if you were able to afford to buy the shares in the first place, which many people are not. And there's something else to think about, and that is, if your account had closer to $10,000 in it, you could have bought 2 of those calls. In which case, as you can see from the calculation, your cost would have been $82.80 and your profit would have been $78,580, way more than the stock trade. And so comparing the 2-lot call trade to the 100 share trade, the results aren't even close, with the 100 shares yielding $42,519 as opposed to a profit of over $78,000 on half the capital required by the nvidia trade. Now, just to be clear, there are, of course, drawbacks to long call trades versus shares, and the main one is that the calls would have literally lost all of their value if the stock had closed below 160, because there obviously is no value to an option to buy shares of a stock that is trading below the call strike price. But remember, we're using quite a bit less capital here in the first place. That's not necessarily catastrophic if that does happen. Also keep in mind that the break even of the options trade is higher, because even if the stock rises, if it doesn't rise by enough to cover the original cost of the call, you'll lose money on the trade. But assuming you can get past that break even point, the leverage of this trade is unbelievable, as you can see from this example. So what I'd like you to take away from today's video is that you don't need to have massive amounts of capital in your trading account to take advantage of major market moves or simply major moves on an individual stock. If you are accurate in your directional call on a stock, the results of buying long calls can be absolutely stunning, as you saw in this example, making a very large profit with very little initial capital and risk, something professional prop traders particularly love to see.
Now, if you'd like to learn 3 more option strategies that our pro traders use, including the unique options trick that allows you to make money while you wait to buy stocks or ETFs at the price you want, and the options income strategy that allows you to make consistent money whether the market goes up or down or sideways, and how to make money on a stock or index trade even if you're wrong on the direction, then click the link that's appearing right now at the top right-hand corner of your screen. That will open up the free workshop registration page in a new window. So don't worry, you won't lose this video. Or you can register directly for free at optionsclass.com.